Good morning, everyone, and welcome to the European crossover webinar. And we did see quite a bit of a pullback once we got past the FOMC. And just adjusting something here. One moment. And we'll take a quick look at that. You can see we pulled back here on the euro dollar from where we were, and really we haven't pulled back. I mean, we've pulled back a decent amount, but certainly there would seem to be more room to go in and give, considering where we were. And you look up here and look at this on a daily versus a 2-hour. You can see a nice bearish engulfing bar right here. And I'm not interested in the wicks. I'm always interested in the body. So you can see the body clearly engulfed. You see here the cable. Nice little pullback here in the cable. Odd thing is with the bias chart we used yesterday, I told you I wasn't going to go on and because I thought we could see a strong reaction. You could see some stops pushed up on the upside, then a reversal come down. So I stuck with whatever the levels were that we had been using, which remember the day before and then yesterday we used the 1954 and the euro, and the high from yesterday, remember, was 19, I guess it's 1966. So I thought there was a possibility we could blow some stops up here if we got the guidance and all that. Mixed messages and signals on how that came out. But you can see we didn't blow past that, but we did go in and reverse back. Same thing here that we saw in the cable. We saw a nice defense of the lower areas here on the dollar CAD. And dollar CAD certainly swung back. Dollar index stayed relatively quiet throughout the whole thing here. And obviously you can see here with the Aussie dollar finally dipped back. Remember, we had that open target of 73.31 after the two consecutive closes above 72.04. We did push higher, but like I said, once you got past FOMC, it was kind of like, I guess you put the cherry on top. That really wasn't a whole lot that we could go beyond. So we'll have to see how things play out, see if we can get a better bounce here in the dollar. But certainly we've seen equities come under pressure, and we'll get to that. So we did see a pretty good little pair back here well, we can look specifically right here on the end on the NASDAQ. Look here on the SPOOs, nice little pullback. But you can see here the NASDAQ, we were really pushing up against this level. We'd actually dipped coming into the session, and we turned around and came right back. And I was short at this time, but I felt pretty good. I thought that maybe we could push higher, and I thought that might really pump up somewhat further. And I actually had removed my stops, thinking, you know what, I'll just have to ride it out, and I'll have to see how we finish the day. But fortunately, we'd already started to fade, and then we just kept on starting to fade more. Initially, it looked like rather quiet, and then little by little, we just started fading back, came right back. Look at this. This is a bit disappointing to see it fall back in here and then come all the way back, way back. But you can see it was coming up here against this 11,390 area, and then we finally started winding down. And then still decent, okay, close. And then in Asia, we saw more follow through. I thought we'd see more follow through in Asia, although it was a steady drip. Eventually, finally started pushing a little bit further. Ended up getting out of my shorts. I'm looking for an area maybe possibly to come back in. Bear with me. I did not update this. There we go. So I haven't had a chance to fool around with these levels, and this is only on the 5-minute chart, but we are above same day VWAP right now. Would love if I doubt it would make it appear all the way up to 2-day VWAP, but probably somewhere in here would be a pretty good little area right there. I'm going to put that in there. But like I said, any moves up, I would believe, up here to around this 11. I guess it's probably like about, yeah, almost 330, probably like 328, something like that right here. It's probably going to be a pretty good little area here. This is solid here. I don't know if it would make it all the way back up here, but we may be able to get that as we open up. We may see this thing pop up a little bit closer, but I think anywhere in this little zone is probably going to be decent. 2-day VWAP is going to be 11,368. We've had such a phenomenal run. If you look here, we came pretty close. I showed in the chat room I was looking for an intermediate target down to 11,207, and that actually confluenced with the VWAP off of this low on August the 11th, and we didn't come too far away from that. We got all the way down to 11,218. That's not bad. We're looking for 11,207, and the VWAP off of this came in at 11,207 also. But I was looking, I just kind of went across his touches here, and that's how I came up with 11,207. And then later on, when I adjusted for the low off of this, the 2-day VWAP came in there. I'm surprised it didn't push down into there, but I covered as we went down to this zone. I thought we might get a bounce before then. Before it made it down, I thought the most you could hope for was at 230. We did make it at 11,218. Then we'd see a bounce and then a rotation down to here. So we'll see. This is going to be key there also. You see right there, 321. We were just now showing 328 here. So all in here, anything up there is probably going to be decent for looking for, once again, a pullback. Look at this run. I mean, it's just phenomenal. That's just since May. It just plain crazy. So really just even a move down here off of the June 26th low, I believe it is here, down to 10.57. You see what I'm saying? We've got a lot of room to go, and not that you even have to be looking for a big correction. Just a minor dip back would take us right here, probably to about 11,100. You see what I'm saying? So still a lot of room to navigate for further. We did see a pretty big reaction here in the gold market. Let's take a look here. Pretty decent pullback there. Already had a pretty good run here in gold. We may see that come back here towards this June 7th VWAP. You can see here that nailed it right here, and I never did get long, but that, remember, this ended up hitting that target in less than 12 hours, and basically it was a confluence of a level, the VWAP off the June 6th, 127% extension here, and almost made it to 38%, but sharp pullback. So probably a little bit better break of 1900 would take us a little bit below that eventually. So we'll see how that all plays out. I'd like to see a little bit better reaction here in the dollar. Let's go on and take a look at the economic data. So coming in today, we did have German producer prices. Then nothing until 8:30 Eastern for jobless claims, weekly jobless claims, and we do have Philly Fed Business Index also at 8:30 Eastern. They're looking for 21. Last time was 24, and leading index change at 10 a.m. Eastern. But that's about it until we move into Australian data, which in the States comes in a little bit later in the day, although obviously a new day for Australia at the time, which would be at here in the States, which would be 7 p.m. Eastern, but that would be manufacturing PMI. So Australian and New Zealand dollars ease as the greenback rises on the Fed minutes. The Australian dollar stepped back from a recent 1.5-year high on Thursday against a resurgent greenback after the U.S. Federal Reserve wrong-footed dollar bears by staying silent on its policy outlook. I actually shared a tweet in here that I would think Bullard, and what he was saying was rates are going to stay low long enough, so there's really there's no reason to give guidance. And so that was like about at least an hour and a half before the FOMC. And I did end up sharing that about a little bit about maybe about 15 minutes before the release of that, saying, hey, look, it already looks like it's going that direction. And at the time I was underwater on those NQ futures, but once again, like I said, decided to hang on. I'll see how it plays out. The Australian dollar, which had hit an 18-month high of 72.75 before the Fed meeting minutes were released, stumbled back below 72 cents and was at 71.73. The Aussie has surged in recent weeks as expansionary central bank policies around the world boosted investor appetite for risk, while commodity prices have also risen. Australia, meanwhile, has managed the coronavirus pandemic better than other countries, further boosting sentiment for the nation's financial assets. Analysts generally expect the Australian currency to stay well bid, with the Fed still seem dovish, even though the minutes from its last monetary policy meeting steered clear of spelling out its policy strategy. The Fed minutes did prove to be a volatility event that was questioned, with the dollar finding a short covering rally, said Pepperstone analyst Chris Weston. The question then is, do we respect the short-term dollar rally in the hopes that it has legs, or do we fade it and buy the pullback in gold and silver, Weston added? I feel the Fed will remain dovish. There's little doubt about that when Congress can't agree on the fiscal stimulus. Analysts will keep a close eye on the Jackson Hole Symposium next week, with the Fed Chair Jerome Powell likely to provide more clarity on the central bank's policy outlook. Later in the day, U.S. weekly jobless claims are expected to drop even further below the 1 million, and markets are warily awaiting Philly Fed Business Index at 12:30 GMT after a disappointing reading from the New York one earlier in the week. New Zealand dollar dropped almost 1.4% from its intraday high of 65.61. The Kiwi has underperformed the Aussie in recent weeks as the Federal Reserve Bank of the Reserve Bank of New Zealand has been a lot more dovish than its Australian counterpart and is even toying with the idea of launching negative interest rates. Boy, who would have thunk that several months back? And I'm saying, even obviously pandemic has done a whole lot of stuff, but I mean, compared to the RBA, the RBNZ is no way you would have ever thought that would have come down the pike. It has been recent, but it's obviously gaining some legs with that thought that they could maybe go with negative interest rates. Dollar bounce falters in Asia as Fed shock fades. The dollar clung to gains on Thursday after the minutes from last month's U.S. Federal Reserve meeting gave few clues about whether an even more dovish shift in its policy framework is possible in the autumn. Disappointing some dollar bears, a heavily shorted greenback put on its biggest one-day surge since March after the release, hitting 93.16 after a basket of currencies about 1% above Tuesday's two-year trough. But in the wash-up, it could extend the bounce, and other majors mostly nursed their losses during the Asian session with little spillover from a sharp sell-down in equities. Expectations include the Korean won. I'm not interested in that. Speculation is rife that the Fed will adopt an average inflation target, seeking to push inflation above 2% to make up for years that have been running below, or look to cap the government bond yields as part of a broader policy review. The minutes were vague on the matters and merely said a number of Fed members thought it would be helpful to make a revised statement on its policy strategy at some point without providing details. After hitting an 18-month high at 72.75 before the meeting, the Australian dollar fell back below 72 cents. New Zealand dollar dropped 1.3%. The euro, most stretched of a recent gainers on the greenback, fell back below 119 and last at 18.49. Traders were hoping that the minutes would cement a clear consensus in the Fed's rank for a series of changes in the September meeting, said Chris Weston, but there seems little consensus in the Fed collective to adopt an inflation targeting regime, which is what so many had positioned for. The dollar's rebound Pulls it back to more or less flat for the month so far against a basket of currencies, but the fact that the bounce didn't carry in Asia, even when the stock market soured, which is true because, as I mentioned, in Asia, we continued to go on and pare back. And as I mentioned, I was short and I was able to cover far better levels than what we are on the close. You see it right in here, and look how far we dipped back. And when you look at this and then compare that to the moves in the euro, look here, you just we've been kind of flat. You see here, right there. It was trying to come back towards these lows that we were at the better lows towards the end of the U.S. session. But look at the difference here. You see how we come back down here. Look, nice. Move lower. And then look here. We just kind of dip down here and we just go nowhere. Fed minutes also sounded pretty gloomy about the economic outlook and will be ringing in investors' ears as they weight the Philly Fed Business Index at 12:30 GMT, especially following a weak reading from New York on Monday. For the Fed itself, the focus now shifts to whether the move will be revealed at the August 27th through 28th virtual Jackson Hole Symposium at September's meeting. All righty, let's move this out of the way and we'll move into the analysis. So here we are looking at the day chart. You can see here a nice engulfing bar. To get a little bit closer look, we'll move into the 2-hour chart. So the Euro post FOMC posted a bearish engulfing candle. Look at once again I was referencing the bodies on the daily chart. The pair will look to retrace to find new longs. Immediate support will be 1807 with a potential move to 1743 before a reactionary bounce. Resistance will be 1884. So let's pencil that in. And move on to the cable. And here we are, same thing, bearish engulfing bar on the daily. We'll keep it on the daily for that perspective. So the cable posted a bearish engulfing bar on Wednesday. Initial support will be 2940 with a potential move down to 2840. Resistance will be 3169. So we're really giving it some room up there. Let's go and mark that off. And let's go move on to the Aussie dollar. We're still up here in the stratosphere. Looking here in the daily chart. So the Aussie saw a downside move following the FOMC minutes. Initial support is going to be 71.18 with a potential move to 70.63. You can see the 70.63 down here. And resistance will be 72.45. And we can take a look at it on a 2 hour, see if we can tighten up the resistance a little bit. Right there, 72.34. That's a little bit better. There we go. Port 71.18. On to the Kiwi dollar. So the New Zealand dollar tested the stops above 66.01 on coming into the FOMC. That was our bias chart resistance. I think maybe we gave it some more room, but I think maybe we kept it that. But anyway, buck close sub 66 cents. The pair will be looking for a move to 64.91 with resistance remaining at 66.01. Oh, we did get some moves at 66.02, but we'll move this down to 66.01. And let's go move into the CAD. This is a very nice recovery on the CAD. Let's move into a 2 hour chart. So the dollar CAD saw a healthy rebound after holding the bias chart support level that we had on Thursday for 31.23. Resistance will be 32.41 with support at 31.55. And moving on to the dollar peso. So the dollar peso held support 22 even in a relatively tight range. Resistance will remain 22.20 with support at 22 even. So there's not going to be any changes here in the peso. Pull up our bias chart, 22 and 22.20. No changes. From there, let's go and move into the dollar peso. I mean the dollar yen. And we saw quite the move in dollar yen off of that. At the time, and I'd share that also, we were seeing interest rates moving higher. One of the bigger bond traders mentioned something about the yields. He also posted this chart. I think I shared that in the room also. We saw a real big jump up in 5 years. And so that was, and I promoted that also, was dollar supportive. We are seeing the NASDAQ come down here. We made up to 300 and we're down to, not too far off. Well, down to 263. It's still a decent little pullback. Probably was to be expected. I mean, we did rally back to an area here. I'll go and share that just real fast for you. You can see here we made up to 11,300 and we've come off 36. And probably not a bad area, but I'm looking for a little bit better pullback. You can see, bear with me. So you can see why. You see? Probably some support coming here. Probably wasn't a bad area, but I probably would look for a little bit more of a little bit better rally off of that. If we do get above that, then that should project us at least up to 330 then at that point. Because then you'll have taken here and here and then come here. We'll see how it plays out. But I was looking for maybe a little bit better move here. The volume has been fair, but actually come up in here. This wasn't too bad here. So I guess a little bit of a dip. But once again, I would have wanted to see a little bit better move here. Probably wouldn't mind taking it on around 320 there if we'd seen it stretch a little bit further, but we've seen a little bit of pullback off of that. Let's go and go back into FX. So getting back to the dollar yen. Dollar yen posted a bullish engulfing bar post FOMC minutes. The pair is open to challenging broken support of 647. Support will be 562. We've already had a pretty phenomenal run here and probably would have thought, okay, it'll probably run out of gas around 528-ish or so. But nonetheless, this is where it can get to. It may not get there today, but maybe it'll get there tomorrow or whatever. But that would be the resistance 647 with the support being at 562. Remember how important it was. 647 was a breakout area. Then on the way back down, it tried to hold. We broke through it and broke through it in a big way. And so that would be the challenge area if we were to get back up there. Let's go and move into the dollar index. I think some people are a little bit disappointed that haven't seen further follow through. Like I said, we saw a pretty good little sell off in the equity indexes, although those have been just on a monster tear. But that being said, the dollar's come off quite a bit, but the moves in the equities have been phenomenal. And as I said, in euro, that was a pretty good strong move, but the moves in equities have just been relentless to the upside. But still, I would probably expect at least up to here to 93.52, considering this reversal. So rather a bit feeble for now. So the dollar index reversed hard on Wednesday. Immediate resistance will be 93.40 and support at 92.78. Okay, let's go move into the cross rates. Okay, finally saw this pull back a little bit further, and we've even posted in here a gravestone doji, a little mini hammer, then a gravestone doji, which probably pretends that we should go and test a little bit lower. That lower test in here with some volume would go take us down to 68.80. No, that's what we had. Not bad. Okay. And then on the upside, resistance comes in at 69.76. Going to the euro yen. A decent little pair back here. Support. You can see this level touch here. Let's go into a 2 hour, see if we see something a little bit more definitive. See all these touches here, right there. That would be 24.92. And resistance, right here, this bar here. Doggone it. $24.92. I think we had $24.92 already. Yeah, and then on the upside, right there, put right to that bar, $25.95. On to the euro yen, I mean the euro odd. $65.81 is still up there. Real nice rebound too. So, and for support, I don't know if it'll make it that low. Let's go with the touches off of these two lows, 64.37. And onto the ASEAN. Well, we are still hanging around here, not really going anywhere, but really the door's open for us to take a dip down here and right there, 75.43. With resistance right there, the close there, 76.49. Onto the guppy. Well, this is a dark cloud cover. Here you can see that we closed through more than 3/4 of the way down. Could have almost been a Gulfing bar if we would have gone a little bit lower, but definitely dark cloud cover. Opens the door for us to move lower. Yeah, I think so. 38.10 on the downside. Side, we can take a look at a 2-hour. It's going to be right there, 39.24. And lastly, wrap it up with a sterling nod. Still holding here. We're holding up here so well that it looks like we want to open ourselves up to a move up here towards this 84.03. But for right now, resistance is going to be right there, 83.49. And support is going to be 81.60. And that'll do it here for FX. We've already taken a look at the equities, and we'll take one quick round on that, though. So we rallied up here to this 11,300. We saw a decent little pullback. If we come back up, and look how many touches you've had here, 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 my thoughts would be it wouldn't just poke its head there and just turn around and reverse. So we probably want to push higher. That should take us around here, which I mentioned here, 11,332 right in here, this little zone here, if we're able to take this out. So this is where I'd be looking for this at least to move to right here. We'll have to see how we open. But I was hoping we push a little bit further here. I would like to take it on here, but we ran out of gas at 300, but you can see why. These touches here. Gold, already a pretty good little pullback. Probably where a good volume comes in is 1922. So we may pull back another $16. Once again, the concern has been that the dollar hasn't really rallied as much. So if we do get a pop back up, take us up to about 1966 here on gold. And then actually resistance will come in right there, highlight it right there, 1973. And then that would provide a good opportunity for people to step in on the short side if we're going to at least test this lower end here to see what it's made of. We're seeing the NASDAQ just rally up just a little bit. But with that, that'll be it. Thanks for joining us here in the European Crossover webinar, and we'll see you in the chat room.